Tēnā koutou katoa, ko Reese Mohi tōku ingoa. Ko Ngāti Awa raua ko te ati honui a pāparagi ngā iwi, ko Tūtau raua ko Otoko ngā marae.
Tēnā tātou katoa, ko Aroha Paranihi tōku ingoa, ko Ngāti Tūwharito me Ngāti Raukawatia ki te tonga o Kuiwi. Nau mai.
Tēnā koutou katoa. Welcome to our introduction to taxes for marae. Not all marae are managed, structured, or even set up the same. They are individually unique in the way they are administered. This koho provides general information on the tax treatment for marae.
The Kaitakoanga Māori Service. First, let's look at the support we have available to help you and your marae. There are Kaitakoanga Māori based in most of our offices. We're here to support Māori so that they have the tools to self-manage their tax affairs. Part of the service is to offer you the opportunity to have a hui at a place convenient to you. This means it could be at your whare or ours. There are applications that need to be completed when your marae is required to come into the tax system. Kaitakoanga Māori can help with these and even sit with you and show you the process. This includes how to register your marae for our online services.
He aha tā tātou e matapakihia. What we will cover. The topics we will cover off in this video include tax exemptions, how different types of income are treated for tax, expenses, employing staff, registering for GST and some other responsibilities.
Ngā umanga aroha, charitable organisations. Most charities don't pay income tax. An organisation can be approved as a charity if they meet certain conditions. An important requirement is that the organisation has charitable purposes. Charitable purposes include the relief of poverty, the advancement of education or religion, or other purposes beneficial to the community. An organisation must register with Charity Services to be approved as a charity. There are advantages and disadvantages with registering. The main advantages are that marae who register with Charity Services do not need to file income tax returns. They will receive donee status and a resident withholding tax exemption. Donee status means any person who donates at least $5 to your marae can claim a tax credit or rebate. Resident withholding tax exemptions means that tax won't be deducted from any interest received from the bank. Some disadvantages are that there is a cost to register your marae and you will have to file annual returns with Charity Services.
Muni whiwhi pakihi. Business income. Marae generate income in a variety of ways. Income tax is paid on income received by marae for its business activities. Business activities include fees from visitors, the hiring out of your marae facilities, catering, or fundraising ventures like selling of hangi. Certain grants are another form of taxable income. It's also important to know that some monies received may not be treated as income for tax purposes. For example, this could be koha, which we will cover off later. Also, as discussed earlier, if your marae has charitable status, you are not required to file an income tax return, but you must still keep records.
Tāke kai ponu kai noho, resident withholding tax. If the marae has money in a bank account, it may be earning interest. Resident withholding tax is deducted from the interest before it is credited to the bank account. The marae can apply to Inland Revenue for an exemption from paying tax on any interest it earns. Details on how to apply for this exemption are on our website, and you can contact your Kaitakoanga Māori for support. As mentioned earlier, if you register with Charity Services, you will automatically receive a resident withholding tax exemption.
Haupu Pūtea, fundraising. Most fundraising activities are liable for income tax. Fundraising monies received from outside the circle of membership will be taxable and may be liable for GST if the marae is registered. Proceeds that come from within the hapu aren't liable for income tax. If the marae runs raffles and sells tickets outside of its membership, these proceeds are taxable. However, you can deduct the cost of prizes from the sales.
Koha. The changing nature of koha is merely a reflection of the dynamic nature of Māori society today. Inland revenue does not define the term koha. However, some examples are when koha is given in place of salary or wages, or as a reimbursement for travel costs. Koha might also be given as payment for a set fee charged for the use of a marae. The tax implications of koha depend on whether the giver receives anything in return for the koha. There may be situations where money, goods or services are given as part of normal activity and are labelled as koha. In these situations, the koha will be taxable. If a payment is received from someone without expectation of anything in return, then it can be considered non-taxable koha or an unconditional gift. In these circumstances, the koha is not liable for income tax or GST. Please note that merely describing a transaction as koha doesn't automatically determine whether it is taxable or non-taxable.
Te tono i ngā ruihi. Expenses. Marae may claim a deduction for expenses directly related to earning their gross income. Day-to-day business expenses include kaiwhuhui, power for the marae, or supplies like stationery. You may also claim insurance and interest on money borrowed for the marae. Documentation is important when you want to claim these expenses. You must keep these records for 7 years.
Haupū rawa me te moni whiwhi. Capital versus revenue. This is an important concept to grasp. It can be confusing understanding how money received by the marae should be treated for tax purposes. A marae might receive a capital grant being money received to purchase assets. Those assets might then be used to earn income for the marae. For instance, a marae buys a new stove. The stove is a capital asset. The marae then uses the stove to make parawa to sell through fundraising. The money made from selling the parawa is the revenue. Another example of the difference between capital and revenue is to think of kaumātua flats. The flats are capital as they are purchased once and have an enduring value. The rent from the flats, however, is defined as revenue in nature because it's received on a regular week-to-week basis. If you need assistance in determining whether income is capital or revenue, talk to your tax agent or contact your local kaitakawaenga Māori.
Utu paremata compensation payments. Another consideration regarding funds received relates to compensation payments. These are payments received from treaty settlements. For example, a marae gets a $100,000 payout for its share of the treaty settlement and puts this into an interest-earning account. The compensation payment is not taxable and won't be declared for income tax or GST purposes. However, the interest earned will be taxable if the marae doesn't have a resident withholding tax exemption. The bank will need to deduct tax at either 30% or 33%.
Te whakamaunama, keeping records. Good records are key to operating your marae. Not only do these help in completing your tax obligations, but they also make it easier to get funding or finance. Of course, they also help you track the financial position of the marae. Good records allow you to know where the marae finances are at, how the income is tracking, and what the expenses are. Some of the records you'll need to keep include bank statements, invoices and receipts, as well as any working papers. They can be kept electronically, so you may scan or take photos of receipts, etc., and discard the paper copies. All records are to be kept for 7 years. You also have the option of keeping records in Te Reo Māori. However, there are some exceptions, namely that donation receipts must be in English. Certain phrases contained in the GST Act must also be used, such as tax invoice, and numerals must be in Arabic, 1, 2, 3, etc.
Ngā kaiwhakawhiwhi mahi. Employers. Employers are businesses that engage someone to work in their organisation. It's up to the employer to understand who's an employee and who's an independent contractor. Anyone that works for you, where you have control over what, where, and how the work is performed, could be an employee. For example, if your trustees or marae committee employ someone to work on the marae, and the worker receives a payment for their work, then you must deduct PAYE, where an employer-employee relationship exists between them and the marae. Other deductions may also be required, for instance, KiwiSaver, student loan, or child support. If you're unsure whether the marae is an employer, we have a questionnaire on our website which will help you to work this out. It's an IR336. If you hire a self-employed contractor, you may still need to deduct tax from their payments. There's a list of contractors that must have scheduler tax deducted from their income. This list is on the IR330C form and is available on our website. A marae might also make payments to the trustees. These are called honoraria payments and are subject to scheduler tax of 33%.
Ngā kauinga kai whakawhiwhi mahi. Employer responsibilities. One of the key responsibilities for employers is to make deductions from wages and from scheduler payments made to contractors. You must keep wage records and budget for PAYE and ACC. You'll also need to ensure your employees complete their tax code form and any KiwiSaver forms if they're eligible. Employers must file employment information returns on a payday basis. This means if you pay wages weekly, then you'll need to file employment information weekly. If your marae decides to employ anyone, there's a lot of useful information on our website and you can contact our kaitakoanga Māori to help you.
Tāhua whakawhiwhi, reimbursing allowances. There may be situations where employees of the marae will incur expenses as part of their job and you reimburse them for the cost. This situation comes within the allowances rules. Employees may be using their personal internet for marae work or using their landline or mobile phone for marae calls. They might purchase stationery or even use their personal car for marae-related travel. If a payment is given to reimburse a person for actual expenses incurred on behalf of the marae, this isn't taxable. However, if the reimbursement is more than the actual cost incurred, the excess is taxable. It's considered an honorarium payment and scheduler tax must be deducted. Documentation is important when reimbursing people. Minutes should be kept of the decisions that are made.
Rehitatanga tāke hoko hoko. GST registration. GST is charged on most things and the rate is 15%. If your marae has a taxable activity, it may register for goods and services tax. If your total turnover in any 12-month period exceeds $60,000 and the marae is conducting a taxable activity, then the marae must register for GST. Turnover is the total value of sales from all taxable activities and includes grants and subsidies you receive or barter transactions. The key question for GST registration for your marae is whether it has a taxable activity. A taxable activity is the supply of goods or services on a regular or continuous basis in exchange for cash, credit or barter. As an example, let's say a marae has a tourism activity providing catering, accommodation, kapahaka entertainment and a tour around your rohe explaining the whakapapa. This is a taxable activity because it's continuous and regular and is in exchange for cash or credit. On this basis, the marae could register for GST. If the marai's turnover is under the $60,000 mark, but it has a taxable activity, the marae can voluntarily register for GST. Some marae have kaumātua flats on site. For GST purposes, this type of income is what we call an exempt supply. This means the rents received for these flats is not counted when calculating the $60,000 turnover, and the rents would not be included on any GST returns.
Ngā kōwhiringa tā ke hokoko. GST options. You'll need to weigh up the advantages and disadvantages to being GST registered. The advantages are that if the GST on your expenses exceeds the GST on your income, you may be entitled to a refund, which will help with your cash flow. Being registered can make the organisation appear more credible and professional, and you'll be able to claim GST on most business expenses. Some of the disadvantages of being registered are that you'll be faced with more compliance work, and it takes time to complete your returns. If the marae receives payments in kind, in other words, non-cash payments, it can be tricky to account for them for GST purposes. Another point is that if you're profitable, you'll also need to budget for GST payments. Some other considerations to think about are who's going to take care of the GST records and returns. Is there someone who has the skills to do the mahi, or does the marae need a tax agent? If you're unsure about your options, you can contact your local kaitakoainga Māori. We're here to help.
Ētahi atu kauinga tāke, other tax responsibilities. Although we no longer accept cheque payments, there are other payment options available. You can pay by direct debit, internet banking, automatic payments, or debit and credit cards. Cash or EFTPOS payments can be made at any Westpac branch or Westpac Smart ATM. If you want to do this, you'll need to use a barcode. This is a payment code which has all the payment information on it and can be found on your Inland Revenue statement. If you don't have the statement, you can create a barcode on our website. As with most organisations, lots of changes can occur within the structure of marae management or trustees. People come and go all the time. Inland Revenue must be kept up to date with these changes, especially if there's going to be a change regarding who has authority to talk with us. To advise us about these changes, Inland Revenue needs a completed Executive Office Holder form, an IR 401. This form advises us who is an Executive Office Holder that may act on behalf of the marae. They can then make inquiries, receive statements, have financial authority, register for and manage a MyIR secure online services account for the marae. You'll also need to provide documentation supporting their appointment to their position. This could be a letter from another authorised person or a copy of the meeting minutes where the office holder was elected. If returns aren't filed or paid on time, penalties and interest are charged. If your marae is having difficulty, then please contact us as we may be able to set up a payment plan.
Ngā rātonga tui hono hau maru. Secure online services. Registering for online services gives you the ability to file returns, including GST and employer returns, send secure messages and make online payments. You can also update details and see what information Inland Revenue holds in the marae account. The registration and login are found on the homepage of our Inland Revenue website, ird.govt.nz. My IR is available 24/7 and in real time. You can also register more than one user on the account. We've recently added a section in our website to support Māori. Visit ird.govt.nz/Māori to learn more about how we can help your whānau or your Māori organisation.
Ngā kārere nui o tēnei rā. Today's key messages. If in doubt about anything, contact our Kaitakawaenga Māori service. We're here to help you. Make sure Inland Revenue has your organisation's up-to-date information, office holders, contact, phone number, etc. Check out the IRD website because we have lots of information and tools available for you to use. Doing taxes online is easy, so register your marae for our online services.
Take whakamāma ko Fiori-19 ma te korona. Tax relief, COVID-19 coronavirus. The government has introduced a number of ways to support organisations that have been impacted by COVID-19. This includes options with respect to tax relief. For the latest updates, please go to our website and view the COVID-19 page. You can also contact your tax agent or ring our contact centre to discuss your specific situation. Thank you for listening today. You can always come back and replay this video whenever you need to. Ngā mihi.